Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Thursday, July the 6th, 2023. It was a very interesting day, and many things happened. The market initially just really began to tank. We saw the Dow down 400. We saw the NASDAQ down over 200. We saw the S&P down, I believe it might have been 50 or 60. And then everybody reached a low, which actually coincided with some support areas, but it actually violated here in the S&P what I was counting in terms of that this concurrent drop would have been a fourth wave. And if you remember that I did speak, I believe it might have been on the 4th when I did the big picture technical update. And also, I may have mentioned it yesterday. I don't quite remember. I apologize for that. But the possibility had come up that because this was beginning to look too big to be a fourth wave compared to what would have been the second wave. So that drew me to what are the other possibilities that this could be. And the one that made the most sense is that it still was only being counted as 3 up, an ABC. And therefore, I'm going to go with that, and that it's the first minute wave 1, and that what all of minor wave 5 is going to start to put in is a diagonal triangle, which is all the waves are 3s. So wave 1 is a 3, wave 2 is a 3, wave 3 will be a 3, still will have power, still will get up. Likely wave 3, hopefully, if that's what we're in, will move to a high above 4,500 and really kind of continue to put into place this finishing minor fifth wave to again finish the overall larger counter trend rally that has been in process since October of 2022. So I revised, I trimmed it all down, put the minute 1 there. This, when you just do straight fibs, which I will do for you on top of what I have, so that you can see that it came down and really came right into, now I gotta just make sure I get that right. And that's gonna be 44.98. Let me just make one slight correction because every little bit helps. And it's at 2 points, and we're gonna take it, and there you have it. So you can see 0.618 came right down and basically the low was 44.19.50, and that support was 44.18.50. So it came within a point. As far as I'm concerned, that's hitting support, and 618 support, which is common for a wave 2, and then rallied strongly off of that level. So on that basis, and on an early wave basis, I felt that that was a wave 2. I'd already moved this up on the break below 25. And that's why I switched it over. In fact, I did it before because it was definitely looking as it was going to be heading towards there. And I wanted to put up what I felt could be wave 2. So I'd already moved this to minute 1, encompassing that entire move. And then this putting in the minute 2, we're off to the races in a minute wave 3. Minute wave 3 will also, and in terms of a diagonal triangle, will form 3 waves up. So initially, we're kind of like put that in place, and I'm going to get rid of that. And now what's going to be left are fibs for coming up in that third wave. And it's 0.618, where wave 3 would be 0.618 of wave 1, is 44.98. So we're right back at that high. If we can get up to 100%, which would be nice as the 3 waves, then we're up to 45.48. So again, what we're really starting to look at here are these higher levels for the minor fifth wave. So we start to build the same type of clusters of resistance, but yet we're not really counting out that fifth wave at the moment. We're only counting out the third. And then we have a 4 and a 5. but we begin to see the potential that we could end up into these levels. Because the minor 5, we already have 45.13, that's 0.618. We have 100% at 46.03. We have 1.618 at 47.47. Those all are consistent with the fib relationships between minor wave 1 and minor wave 5. But if we're looking for this to build into a 5 wave and a diagonal, it should begin to triangulate, so to speak, as it continues to move up and just kind of wedge. So we'd be looking for things to kind of just do that pretty much from wave 3, and then 2 goes to 4, and it should just wedge its way higher. So this just goes the fib lines. We'd be looking to draw a trend line from here and then likely start to wedge. So again, we'd be looking around in here as this wedge forms. So that's what I'm going with right now. Now, the other side of this coin could be, I'd have a hard time counting it all out to put 5 up here. But it did move to a new high above wave 3, albeit only 4 points, but still it moved to a new high. If indeed the market just turns and continues to drop precipitously as it did basically from the opening, then we may be looking at that type of a situation. Right now, I'm not. Right now, I'm feeling pretty strongly about that. I think that the rally will pick up again, and the S&P will manage to get itself back above 4,500. But at that same token, I want to just tell you, at that same token, we have as the alternate the failure of it to get back above 4,500, the failure that it all ended right there on June the 30th. And this is the beginning stages of a larger first wave down in the next impulse sequence that will take us quite far, to be honest with you. Because what we would be finishing up here would be minor 5, intermediate wave C, and primary wave B. And if we pull it out and just take a look at the daily, there is primary wave A, October low. Intermediate A, intermediate B, this is all intermediate wave C. That could be the completion point. We certainly fit the bill up here. We're up at a level that everything is in alignment in terms of level-wise. And we put an intermediate C, and then on top of that goes the primary B. It all fits. Now, I'm not declaring that. That would be what ultimately I'm looking for. And if we start to break down here, and we basically would have to come back all the way and start breaking below 42, 43, 42, down towards 41. At least start to break below the top of the A wave, which is 42.89. 42.95, excuse me. So the market, yeah, it has the room to drop, but we would start to really give it a lot of thought if we quickly dropped back down below 44, below 43, and started to break these higher levels. That would start to put a different spin on what the market was doing. And on an Elliott wave basis, we could declare that that's all done, and we're now beginning to drop in the next sequence down, which of course would be a primary C wave. And then the first leg down would be an intermediate first wave. And then inside of that, it's going to be a minor first wave. So, and it can go pretty far. So on a daily, you can see that not really all that much. So back to this hourly chart. I'm looking for it to turn and continue to move up. And right now, they are kind of just still wanting to sell some. And again, we have to allow the market to determine what is actually going to happen. But if I open this up Now, if this is going to be wave 2, this could be a very small wave 1 of 3. And now we get a 2 of 3. And then we're just going to start to keep going up. And again, we should get an ABC. It should look like an ABC, a 3-wave rally, 3-wave decline, 3-wave rally, 3-wave decline, 3-wave rally. So waves 1, 3, and 5 are going to be ABCs. They're going to be 3 waves versus 5. We'll label them as, wave 1, 2, 3, 1, 3, and 5, but they're not going to be those clean 5-wave structures. And moving averages, they kind of got caught up in this decline. And you can see that even the 200 went flat, but the 50 turned. The 50 turned today. After yesterday and then today, it started to pick up a little steam. The rally gave it a little bit of a pause. The 20 still heading sharply lower. The 4 and the 8 dropped, followed up, and now are cresting and beginning to turn again. I expect them to follow pretty cleanly what happens to the market. But these, if we start to get this to turn lower and this begins to head lower, and then it's going to really be being a telling sign. So those are what I'll be looking at, but right now they're okay. If we get a decent rally, then I believe it will turn the 20 and the 50 back higher again, and the 4 and the 8 get above that 200 and above the others, and we'll be back on track to rally. It's going to want some good news to do it. Whether it gets that or not, I don't know. Over in the NASDAQ, it pretty much is the same picture, except it's not a triangle. The NASDAQ actually did put in a nice 5-wave structure up. But again, if this would have been minute 1, 2, minute 3, this should have all been a 4. But this started to get a little, even though it went up and made a new high, it didn't make the new high there. It just made a new high over this. That I was feeling that this could have been wave 3 and this could have been wave 4. But see what it did? There would have been wave 1. And it just crushed it. So same deal. I did count 5 up. So I put the minute wave 1 up here. So the S&P and the NASDAQ are still basically putting in a minor 5th wave. But on the minute degree, they both finished at their recent highs from the 30th of June. And this is actually from July the 5th. The S&P was from June 30th. Put in those highs to complete minute first waves. And now, I believe as well, came down, touched support, and rallied. Came off of that pretty cleanly, pretty strongly, as a matter of fact. And that gave a lot of credence to that support level. And I can show you that support level so that you can see what I'm talking about here. See, right here, it came below the 50, which is pretty common, and it dropped halfway between the 50% and 62% retracement levels and hit a bottom at 15,111. And the next support down was 15,075. And so I actually thought that's where it was going to head. Then it stopped and it rallied, and then it rallied, and then it rallied, and then it rallied. On the hourly chart, it rallied 1, 2, 3, 4 hours. It rallied almost into the close. It got up to 2 o'clock. Then we got a little bit of a selling into the close of our market. Moving averages still also following the market, but that 200 got pretty flat. Even the EMA and the SMA are pretty flat. So I'm not overly concerned, but I am paying attention. Because once again, the NASDAQ is not in the same boat where this particular wave put in a new high above the mid-June high at 15,475. So eventually, that's what I'm going to look for. But now, what do we have going on? If we're in a third wave, and again, does not have to be a triangle, 100% is 15,689. 1.618 is 16,047. What's going to drive it there? Well, today it was Meta and Microsoft that actually were preventing this from dropping even further. I mean, that was the initial, but then once 10 o'clock rolled around, it was like, buy it, buy it, buy it, buy it, buy it. And that was coming from Microsoft and Metaverse, both up strong today, versus the balance of the market getting hit pretty hard. So if that continues, but we get a general rally going, then I can see the NASDAQ really picking up some steam and just moving higher with some gusto, so to speak. So we have upside resistance. And I'll take this back out again because I was just showing you the support levels it reached. So no need to leave those up and confuse our picture. We have our resistance. These are the ones that matter. 618, 100, 1.618. This is for the third wave. I'm not looking for that, but I just put it as a marker that this is what get us above wave one, which it needs to do, of course, but it might just provide a point where we stop, we bounce, we come back a little bit, and then rally on. 100% where wave three would be equal to wave one is 15,689, clearly getting back above there. More likely we're going to see up in these upper levels, and that's only wave three. I'd like wave three to be longer than wave one, and that could be anywhere above 689, 15,700, 720, et cetera, et cetera. Once we get going inside that third wave, I'll be able to throw additional fib levels up, which would go along with where we might find it to top out, put in a 4 and then a 5. We continue to see basis the minor fifth wave fib comparison to minor wave 1, where 618 is 15,641. 100% is 16,129. 1.618 is 16,917. Again, that's going to be above and in new all-time high territory. Not necessarily looking for that, but there it is. And it remains because it is a technical level. But 100%, that's usually the spot where the fifth wave equals. So the relationship between wave fives and first waves are that it falls under what we call equality. And that's, in this case, 16,129. So all in all, the wave count or the movement in the market made it pretty clear. And if we follow through, again, it's going to be the same story here. If we start to break down even more, then what I can say is that this was A of 2, B of 2, and we got a C of 2, and we could drift all the way back down to 14,854. That's the low. Just can't exceed it, but it certainly can come down further. I mean, this was the halfway between 618. I think 618 was down here somewhere, and then we got, 100. That's going to be down here. Right there. So these all remain possibilities. Or we just pick up the rally again and continue to move higher. So for tomorrow, it is an expiration. And I'm sure that within a lot of the component stocks, there are going to be levels that the market's going to gun for. Particularly like in Metaverse, it happens to be 300, believe it or not. That was the heaviest traded option today. The July 7th, so the expiration tomorrow, the July 300 call in Metaverse. In Microsoft, 342 to 345. Apple, well, I'm going to assume that they're going to want it back up close to where they were last Friday for the end of quarter expiration. And that was back above 194, which means, Apple's got to put in a pretty strong rally. Can it do it? Sure, it can. And if those components, right, along with Tesla, which has really been gaining steam, got hit again today, as did the broader market. But if they pick up that rally again, then that's what's going to be supportive, and put in another one of these. That, and we could be back there and maybe even higher. That is where I'm going to continue to keep it for today. And the next update will be on Sunday, July the 9th. And that'll be an Elliott wave update. I may be able to put together a big picture update. Again, just recapping and putting that big picture together on a technical basis. And that may come on Saturday. But for sure, because our markets are open next week and they'll be open on Monday, once Globex opens on Sunday, I will put together an Elliott wave update to get us into Monday. In the meantime, have a great trading day tomorrow. Have a great weekend. And the next update will be on Sunday.